That's what you have to check. Assalamu alaikum. Sorry. Amalgamation, absorption, and external reconstruction. So tuandike. Tunaanza. I can see. Charles amekutumia salamu.
Yes.
Settle. So we just want to write. You say external, let's start with external reconstruction. Then you say is a process, that is external reconstruction, is a process in which a company's affairs, are wound up, from the word winding up, company's affairs are wound up, and a new company is formed. Are wound up, and a new company is formed to take over the assets and liabilities. Of the existing company. Assets and liabilities of the existing company. Full stop. Down there, amalgamation, you say, is a process where two or more entities are liquidated to form a new company. Absorption. You say is a process in which the operations of an existing entity is taken over by another existing entity voluntarily or through hostile acquisition. Full stop. If you check those three, you see whether there is any difference between the amalgamation, absorption, and external reconstruction. Is there any? Also, the one which brings disconnect is external reconstruction and absorption. But there is a difference. In external reconstruction, you wound up an existing company, then you form a new company. So a new company is formed purely to take over. So it was not there. There was no existing entity. A new company is formed to take over the operations of the company which is being wound up. In absorption, an existing entity is wound up, not really wound up. It's wound up and taken over by another what? Existing. In external, there is no existing entity. The one which is being wound up is the one which was existing, which is being wound up, then another one formed to take over. So here, the one taking over is not being formed. It has been there in operations. So it just take over the existing entity. Amalgamation, this one kills, then they join. Note down there, note, for accounting purposes, there is no distinction. There will be no distinction. For accounting purposes, there will be no distinction between external reconstruction. There will be no distinction between external reconstruction, comma, amalgamation, and absorption. There will be no distinction between amalgamation, absorption, and external reconstruction. What that one means, if in the question you find absorption, amalgamation, or external, it's just done the same way. They're done the same way. So there is no distinction between the three for accounting purposes. We account for them in the same way, which is now okay. Check for me 2016. November 2016, question 3. This question 3. Check 3A or 3 something. Just check. November 2016. What were they saying? November 2016. Question 3 something. November 2016, question 3. 3A. Hiyo theory nataka. How many marks? 4 marks, yes. A is talking of distinctions between external and internal reconstruction. Tuandike hapo. Distinctions or differences between external and internal reconstruction. Between external and internal reconstruction. How do they differ? So, write for me there. Basis. Then we can start with the internal. Then you write external. So that is the basis of comparison. So basis number 1, let's talk of the meaning. So let's talk of the meaning. That is number 1. So under internal, we say it refers to the method of corporate restructuring. Refers to the method of corporate, that is internal, method of corporate restructuring, where an existing entity reorganizes its capital structure, internally. Its capital structure internally. The other side is one in which The company undergoing construction is one in which the company undergoing reconstruction is liquidated, and its operations taken over. Liquidated and its operations taken over by the new formation. Its operations taken over by the new formation. Number 2, formation. So for internal formation, you say no new company is formed. No new company is formed. The other side, you say a new company is formed. A new company is formed. Number 3, capital reduction. Capital reduction. Then you say it involves capital reduction and waiver. Capital reduction and waiver of external liabilities. Capital reduction and waiver of external liabilities. Waiver of external liabilities. The other side, no capital reduction. No capital reduction. No capital reduction takes place. Yes. No capital reduction takes place. Number 4, court approval. Court approval. Court approval. So for internal, you say court approval is mandatory. Court approval is mandatory. Court approval is mandatory. The other side, only members' resolution. Only members' resolution is required. Is required. Next, transfer of assets and liabilities. That is number 6. Number 6 or 5? 5. Transfer of assets and liabilities. Transfer of assets and liabilities. You say no transfer takes place. That is internal. No transfer takes place. Then the other side, say assets and liabilities are transferred to the new formation. Full stop. Full stop. Full stop. Maybe I don't know that to add this. Yes, it can also be. We can bring it as the last one. The experts. Experts required. The experts required here. So internal, the expert is who? The receiver. While external, we require who? Liquidator. External is carried out by a liquidator. Internal is carried out by a receiver. That one can also be a distinction when points are over. Down there, you say the main concern the main concern during external reconstruction. The main concern during external reconstruction is on how to determine the purchase consideration. How to determine the purchase consideration. To determine purchase consideration, i.e., the amount that the new company should pay to compensate. The new company should pay to compensate the existing entity, to compensate the existing entity being taken over. Existing entity being taken over. Full stop. That is the main issue, by the way, how to get that purchase consideration, because they will not give you. So down there you say, purchase consideration is determined using either of the following approaches. So we do have three. Using either of the following approaches. Three of them. So one, we have what is called net asset method or approach, whichever. Now what is called what? The lump sum. Then we have net payment method. All right. So in the net asset method, to know how much you're supposed to pay to compensate the company, you just take the total assets minus all the what? The liabilities. So let's start with the net asset method. Net asset method. Net asset method. Then you say, under this method, comma, purchase consideration is considered to be the difference. Purchase consideration is considered to be the difference between the total value, of the assets acquired, total value of the assets acquired, total value of the assets acquired, total value of the assets acquired, and liabilities taken over from the selling company. Liabilities taken over from the selling company. Net asset method tumesema the purchase consideration is considered with the difference between the total value of the assets acquired and the liabilities taken over by the selling company. It's only simple. From the selling company, yes. So that is easy. You take all the assets you are acquiring minus the liabilities. Then that is what you need to pay. Next, lump sum method. Lump sum method. Lump sum method, you say the purchase consideration is agreed upon. The purchase consideration is agreed upon by the parties. Is agreed upon by the parties without taking into consideration. Agreed upon by the parties without taking into consideration the values of assets and liabilities. Without taking into consideration the values of assets and liabilities. Bas. How does that one operate? Huh?
I think it's just listed out, but it's like let me just have this.
What are the kulipe to 1 million which you can put? So you don't consider anything at all. You don't do any valuation. Are net assets you do valuation? Eh? Yes, then that one reminds me of dowries. What did you skip out? Kate. So Kate, and Ellie. Tell me, in your places where you come from, how is dowry determined? How is the dowry determined? Yeah? So for the Muslims, the lady determines. No. Yes. So for the Muslims, it's the lady to determine. This is the match you should bring. Eli, so your method ni gani? Hiyo haina method. Wacha tuende kwa case. Yeah, labda hiyo inakuja kwa net payment. Without determine. An agreement. Kenye Mungu amekubariki nayo. I think there is a serious negotiation. Mpaka watu wanakosana. Sio? Hiyo ni net payment. Like I remember I had a friend who was a student back then, I think 2017. So he was giving me a story. Alilipia mtu fees, the lady fee after high school, immediately after high school, because the parents were not able, which is taking over the liabilities, which is quite normal. So he paid for her B.Com hapa UoN, akamlipia CPA mpaka akamaliza section 6. Then now they decided to marry each other. So they went for the negotiation. Unajua aliambiwa wazee walianzia 1 million. Akawaambia yes, akawaambia pesa alikuwa nayo yeye amemlipia fee. No, aliambiwa but you are marrying a graduate. And who produced the graduate? So here's the story. Acquire fast. Yeah, acquire fast. Our tradition is very simple. Yeah? Our tradition is very simple. Okay. Where you come from? This is where I come from. Yeah? What's normally happens is
explain a little the introduction. Get here from the inputs. Now, the is what you want. For like 5 of them. The press signature, the same same, but you know the signature. Then for among the 5, we choose who is yours. If you happen to choose the right one, let the other one just take half of it. And call it over.
Nitapanga na yeye. Alafu kule hii.
Okay. So Elizabeth anasema alafu graduate aende kusumbua. Let's go to net payment. Where I come from is lump sum. Lump sum you just ngombe mbili iko sawa. Sio hili. Ngombe mbili ni sawa. No negotiation. Yes. However, me I would like my daughter to be on a net payment. We negotiate. Hakuna kitu kama hiyo. Bring what God has blessed you with. Mwende muishi salama. Full stop. Maneno mengine wachana naye. Let's go to this one here. Net payment. Next. Net payment method. Dominic, tuandike. Net payment method. So net payment is the one which is in bracket recommended. That is the one we are going to use for external reconstruction. Recommended. Naomi amesema she's supporting me on lump sum. Net payment method is the one which is recommended. So you say the purchase consideration is considered. The purchase consideration is considered to be the sum. So because that is the one you will be using, to be the sum of all the compensations, to be the sum of all the compensations to the providers of capital. All the compensations to the providers of capital. Providers of capital, in bracket, ordinary shareholders, comma, preference shareholders, and debenture holders. Ordinary shareholders, preference shareholders, and debenture holders. Close the bracket, full stop. Full stop. Another hyphen, the compensation may be in form of cash. The compensation may be in form of cash. May be in form of cash, comma, debentures, or shares. Full stop. Another hyphen. In case the purchasing company pays stock in cars, liquidation costs, on behalf of the selling company, then such costs should be treated. And recognized as part of purchase consideration. Full stop. NB, net payment method is highly preferred. Net payment method is highly preferred for determining purchase consideration. highly preferred for determining purchase consideration. Full stop. Can you go through that method before we expand on it? What are they saying in that method? If you can explain it to a layman, what will you say? Hiyo tumeandika ni professional way. Explain hivi tu. How do we determine that purchase consideration?
I think the method is considered simply treat it
Yes, the main owners of the company. You find during that process, wanalipwa kidogo kidogo. So whatever they were given, we sum up all that, then we say that is the purchase what. Hata wacha niwape a good example. Sijui kama hiyo itakuwa aibu, but hata kama ni aibu ni ukweli. Wacha ni let me hear randomly. But then, what was your first salary on your first job? Yes, your first job. How much was your salary? 25. Your first salary was 25,000. 2013. Another testimony. Eh? Isaya anasema yake ya kwanza ilikuwa 12k, Naomi anasema 4,000. Be very honest. My first salary was 25. So I have followers. Yes. Mine was 2,500. Yes, per month. That was 2010. Per month, yes. Yeah? 2,500 Kenya shillings. Yes. So what used to so niko na watu wengi hapa kina Elizabeth wana put 35. It happens. Wewe ulianza na 3,000. Kwani hapa unaona si ni juzi tu. So what used to happen? We employer, and this is why you should not be a friend to your employer at all. We were friends. So the first month, sikuwa najua venye tunaenda. Naona atembee na watu wengine, lakini sasa mimi tunatembea. Tunapitia mahali tunakula. Kumbe the guy is recording. Wacha ende month ifike. Nikaona nimetumiwa salary ya 900. How? Akaniambia kesho nitakupea breakdown. Kuna siku tulipita somewhere. Hii ndio ilikuwa. Kwani wewe unaona ikiwa kitu kubwa sana? So unapewa breakdown. So what is the pay consideration? All the amounts you have been done what? Given. So that is net payment. So in reconstruction, I think when you put in a kushtua, it's possible. Kwani wewe after campus ama after college umekaa kwenye kwa nyumba mpaka unatamani tu kutoka, anything which can remove you from the house. You have never been in that situation. So unaenda unakaa huko. So unalipwa, kumbe wewe ukikula yeye ana record. At the end of the month anakupea breakdown na ukweli ulikula huko. So that is called net payment what? Method. So in external, what happens? The purchasing company wamekaa ordinary shareholders wakawapea cash. Ati leo tumewapea hii, wende mjisort kidogo. Wao wana record. By the time they are coming now, the date they are finalizing, they say, "Siwe tumekupea some cash. We give you some shares, debentures, where some loans. But hiyo yote we add up. Let's get the difference." Then unapata hiyo difference ni kidogo. Mpaka sasa wao ndio wana cater for liquidation what? Liquidation costs. So where the purchasing company caters for liquidation costs, you include it as part of purchase what? consideration. Sawa, so yes.
Yeah, I have a contract. It's not detaching the owners of the company completely with the
Mostly they don't detach.
because
Unapata ni ile tu what they apply. Actually, what he's saying is very crucial. Don't view it at in another company, new directors who hapana. Mostly in all, actually, in reality, it might be different. But in these questions, the same directors utapata wanaenda huko. So what they apply that concept in accounting known as the entity what? Concept that the entity is separate from the owner. So they are saying even if we are changing, sisi pia tufanye nini? Tujilipe. So they assume that they are being acquired by another company, but you want to change to the new formation. So you find the same directors are the same directors. They are giving themselves shares, debentures, cash in that other entity. Process, subtopic, process of external reconstruction. Process of external reconstruction. Alice, nani ashindwe? Process of external reconstruction. Process of external reconstruction. I'm just wondering how people get worried. At mtu analipaje 3,000 na una survive. It is possible. Charles, how much was your salary in your first job? You worked with IBC.
Okay.
Yeah. So people start from there. Na ukasema Mungu kama unaweza nisaidia tu nipate 8,000 nitaama home, sio? Na ukatoka kwa 4 ukaenda kwa 40. Life is still the same. Process of external reconstruction. Process of external reconstruction. But I ensure the cover your pesa yote what he was supposed to pay. After like 4 years. Nikamwambia sasa siku hizi nafanya tax consultants, so you can be my client. See, so I got a client from 2016. So nimemcharge mpaka sasa hivi ndio recover your best. It pays a lot. So process of external reconstruction. One, you say close off the books. So your process nataka ikuwe kwa fingertips. Kuna venye wanakuwa rigid in exam, wanakuambia to the necessary books to close the necessary accounts to close the books. So you need to know how that process goes. So one, close off the books of the old company. Close off the books of the old company, which includes one, realization. Includes realization accounts. Realization accounts. New company, you will come up with the new company's account. You will close what we call sundry members. Sundry members accounts, in brackets, ordinary and preference. Ordinary and preference. Sundry members. Ordinary and preference sundry members accounts. Full stop. Full stop. Number 2. So hapa ni wanakuanga rigid, they will tell you the necessary accounts to close off the books of the old company. So kama you use your books, it will bring problems. I'll explain some. Number 2, open the books. Open the books. Open the books of the new company. Open the books of the new company, which includes, open the books of the new company, which includes Roman 1, journal entries. Journal entries to record the acquisition. Journal entries to record the acquisition. Then 2, opening statement of financial position. Opening statement of financial position. Full stop. And if nasema muajiri ashindwe kabisa hapana. It's just normal. So now, what happens? The examiner, sometimes they are good, they will tell you the accounts to close, but in most questions they will tell you, come up with the necessary accounts to close off the books of the old company. So you'll come up with the realization account. Realization account, you close, now the company is being closed, I want a balance sheet. So you close off all the assets, you close off all the what? The liabilities. So it is debited with the assets and credited with liabilities at net book what? Values. The new company account, this one you just prepare to show how they settled what you have invoiced them. So you told them the purchase consideration will be 1 million. Then now when they pay, you credit their account. Sundry members account is the final account of settlement, where you pay now. You pay the ordinary and preference shareholders. You tell them, this was your capital, this is what we have given you, this is the balance which you have lost or you have gained. So some students are watakangi hii mambo ya sundry members. Sundry members is the final accounts of settlement. Settlement to show how these two people were settled during external reconstruction. Hizo stories zimetosha. Illustration. So these are some of the questions in external. Highlight them. May 2016, question 3. May 2018, question 2. May 2021, question 2. May 2019, question 3B. August 2022. Hey, Gilbert. Gilbert, what are you writing? So we are near May 2023. May. So hizo ni ngapi tume highlight? 4. So I'll do the first 3. We'll do the first 3, then you ingine nitaanza kama assignment. So for today, nataka tungangane tufanye 2, then tomorrow we finish with 1. So let's go to 2016 kama itawezekana. Let's start with May 2016. Ilo tunataka kumshaandika August. So May 2016, I think the question which you had open. May 2016 question 3. May 2016 question 3. Page 96. Any other page? Oh no. Mine is page 96. There's something maybe I can mention before we start. In internal reconstruction, intangible assets, like in a goodwill, they were being written off to capital what? Reduction. So in external, you know the substitute or replica of capital reduction in external in realization account. Capital reduction in external realization. So we don't close off intangible assets to realization account. We close them off to ordinary shareholders account. So kama goodwill was there, so goodwill is a reputation ya biashara. When goodwill was there, who was enjoying? Since the owners. Now that it is being closed, you are the people to suffer that. So intangible assets which have not been taken over are written off to ordinary shareholders account. We'll see. So let's read the question. AFRA Limited, which has been operating in the telecommunication sector, has been posting successive trading losses. The directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity to be called Zawadi with effect from 1st April 2016. So, no problem. The following statement of financial position relates to AFRA. So, AFRA Limited statement of financial position, as you guys can see. Let's go to the additional information. Zawadi Limited issued, ni kizungu inakuanga hapo, but inabidi mzoee. Zawadi Limited issued, Zawadi is the new company. Yes, they issued 3 ordinary shares of shillings 10 each for every 7% cumulative preference shares in AFRA Limited. In addition, the 7% cumulative preference shareholders in AFRA Limited were issued with 2 new 10% preference shares of shillings 10 per value in Zawadi for every 7% cumulative preference shares. Story. So what they are telling you is how they compensated. How they compensated. Purity, we are doing May 2016. May 2016. Question number 3. So they are trying to explain to us how they compensated preference shareholders. So they are saying Zawadi issued 3 ordinary shares of shillings 10 for every 7% cumulative preference. Nani anakuwa compensated in that sentence? So the preference. They give out 3 ordinary for every 5 preference. It means if you had 5 preference, you're being compensated with 3 ordinary. In addition, number 2, preference dividends in AFRA. AFRA is the old company. In AFRA, how many years in arrears? 3. They had not paid them for 3 good years. The 7% cumulative preference shareholders in AFRA will accept 3 fully paid ordinary shares of shillings 10 each in Zawadi Limited and shillings 20 of 8% debentures in Zawadi for every shillings 100 of the preference dividends in arrears. So they are just trying to say that preference shareholders have not been paid their dividends for 3 years. So they are complaining, kampuni naenda, they have not been paid. So the examiner is trying to tell you how they were compensated. They were given somewhat ordinary. So they were given ordinary, na wakapewa debentures. Number 3, the existing 10% debenture holders in AFRA were issued with 5 fully paid ordinary shares of shillings 10 in Zawadi and shillings 40 of 8%, that is 8%, debentures for every shillings 100 of the 10% debentures. So they have told us how they compensated the debenture holders. The ordinary shareholders in AFRA were issued with the 2 new ordinary shares of shillings 10 each in Zawadi Limited. So that's how ordinary shareholders were compensated for every 5. The current liabilities of AFRA were taken over by Zawadi at book value. The assets of AFRA were transferred to Zawadi at their fair values as follows. So they were taken, as your eyes can be able to see there. The liquidation expenses of AFRA amounted to 30 and were paid for by Zawadi. Japo wanaonesha madharau sana hata amungeweza hata kulipa auctioneer. The auctioneer, someone used to connect on that. Valuers. They are the people who incur. All the above transactions were completed on 1st April. No problem. Required, Roman 1, the relevant ledger accounts to close off the books of AFRA. So kama ujui hizo ledgers, unaweza fanya nini kwa mtihani? Ujui kabisa hizo ledgers. Na unaona 8 marks. Tunajaribu. Which ledger will you jaribu? Kama ujui, kuna kusahau na kukosa kujua.
I don't know anything. What that is all that is affecting. Each one is affecting. And I don't know so the way I did I was not trying to say now this stuff.
Hiyo hakuna itabidi tumeachana nayo. Then B, journal entries to record the relevant transactions in the books of Zawadi. So here is Zawadi, then statement of financial position of Zawadi. So let's start with those relevant ledgers to close off the books of AFRA. Realization, new company's account, preference, those sundry members' accounts. So let's start. Something unique about realization, that account must balance. That is the unique part of it. Another part of variation of chocolate. So let's draw realization account. Sorry. Realization account. Realization account. Realization account. People are just mad. Remember Sri Lanka, State House. All of them. Yeah? Is this true?
Yes.
It's true.
It is true.
What of Meta State House? Mpaka wanasui mambo nje. How? When you touch, how do things get bested by touching? To express.
Yes. No, maybe they are that's what they are doing that.
So we're in this TV as State House.
I think
How will things get better?
next is
The cost of living is
The cost of living is going high.
and somebody is in a position that now.
That is unique. No.
next is Kenya.
After exam.
Yes.
Look at you. Eh? The inflation is going up, but it's everywhere. It's everywhere in the world. And you know the reason? You know the reason why that you see when Corona hit the buyer. Then when people are trying to get out the war, you know that war has also serious impact. Then you see, like us, we depend on which countries for imports. See China. See China, unajua bado wako lockdown. Yes, very big part of China. You know China, there are around how many people? 1 billion. Huh? Yes, 1 billion. So imagine hapa Kenya 40, 50. Na kuna mali hazikufika. So imagine 1 billion people. So in China, you know China bado wamefunga. So the products hazikuji. Then US kama kawaida, you know they have taken the advantage. You know what they did? They increased the bond rates. You know when you increase the bond rate, what happens? People are running to buy the what? The bonds. So even these ones, Kenyans, wale sasa serious investors, wamekimbia to invest in bonds in US because the rate is too attractive. So pesa imeenda huko. So COVID, hiyo war, US will increase bond rate to entice wadosi Hao wengine wanabaki hivyo. Then just do assessment. I know some of us here are bankers. Banks are not giving loans right now. Labda hii ya salaries, but serious loans mefungwa. So there is no money out for circulation, na ile yenye iko imekimbia kwa bonds. How do you expect? That is what is happening. So anyway, let's continue. Let's continue. So now realization is very easy account. Ikikuja kwa mtihani usiseme hiyo kitu ni ngumu. This account, you close all the assets which have been taken over. You close all the liabilities. So how do you close that account? Assets in the ledger. Assets are normally having which entry? So to close off your assets, credit the asset and debit which account? With book value, not taken over value, book value, really account here, the old company. So you bring the book value of all the assets taken over. Let's start. Go to the balance sheet. Go to the balance sheet. But please make sure you debit the assets taken over at their book values. So PP was taken over. Yes. So PP at book value. At book value, this is 10,957.4. Available for sale. Available AFS 647. Goodwill, no. Preliminary, no. Inventories. Okay, from what we have read, but by the time we'll be finishing, you'll realize external is easier compared to internal. Inventories, 872.5. Receivables. Receivables is how much? 689.9. Financial assets, 216.4. 216.4. Then bring the kuna zile nataka tu mjue. Unaona hiyo preference dividends in arrears is all, unaona the way we are recognizing it in the capital reduction as part of the losses brought forward. Even here, bring the preference div in arrears in full. It was compensated later, fine. So preference div in arrears. Preference dividends in arrears. How check the balance sheet? How much? What percentage? What was the percentage of preference? 7%. So check 7% times 4,000. Then they were in arrears for how many years? 3 years. So you recognize it here in full as part of the losses brought forward. So bring it there. Then it will be compensated later. How much is that? Yeah, 800 and what? 40. Then there are some which are obvious, which I want us to finish up. The liquidation costs. When those people pay for us, give us money to pay for our liquidation cost, you will credit the cash book. So utapokea pesa ulipe liquidation cost. Credit the cash book, then you debit the capital reduction with that amount. So cash book with the liquidation expenses, you also bring it here, liquidation cost. Was how much? Note number 7, check note 7. They paid for us how much? 30. Go and credit the cash book. Go and credit the cash book, debit the realization account. That is the double entry. Go to the liabilities which were acquired. Go to the liabilities which were acquired. Liabilities which were acquired. Liabilities which were acquired. Bank overdrafts. What did they say? Check this note. Check note number 5. The current liabilities of AFRA were taken over at book value. So bank overdraft This is 775.8. Payables. Payables is 1962. Income tax 275.1. So that account you cannot complete until you finish all the ledgers. So just leave it hanging. Leave it hanging. Then you go to the next account. But see, those people, are they managing this inflation? Yes, they are. Huh? To increase bond rates. That is the first way. Na kunyima watu loans. You know, when you want to control inflation, get money out of circulation. So getting out means don't lend, then entice them with something. Yeah? Saimu kisikiati treasury bonds are going at 30%. Sikila mtu atapeleka pesa hapo. People will buy those bonds very fast. Then don't give them the loan, so there is no money in circulation. So the demand for the products itapungua. So ukienda kwa supermarket unapata vitu ziko hapo na kuna mtu ananunua. Yeah, so when the demand goes down, what happens? The price itashuka. So for some 6 months it stabilize. Next. Of course, it cannot be that. Alright, so fine. Next, come up with the new company. The new company is known as Zawadi. Andika hapa Zawadi. Yes, please. Yes, sawa. What normally happens with this preference dividend, what happens, you know, those preference dividends in arrears, in quotes, they are part of the losses which we have been carrying from previous years. So those arrears, which are the accumulated losses, they normally have a debit entry in the P&L. So to eliminate them out, you credit P&L. See losses are yes. So sure. Yes. Yes. So credit the P&L, then debit that account.
Now, after this, the number 12 told us that the new company has accepted.
So when they will be compensating, we'll credit to clear off. We'll clear off by adjusting the credit entries for people. Yes, so when you were young, what of the P&L, it will take a long story. Zawadi limited account. Zawadi limited account, this is the purchaser. The purchaser's account. The purchaser's account. The purchaser's account. So purchaser's account, what happens? Zawadi, utawatumia invoice, walipe. So when you send them invoice, you debit here. You say purchase consideration, which we don't have. Purchase consideration, which will go to realization actually. It will be part of your realization, what you get. So That one we can't get. The purchase consideration we can't get now. So that account also leave it hanging. Like 6 lines, there's nothing you can do. You have to finish all the ledgers. It will automatically. So that one also leave it that way. The other account we need to prepare is the sundry members. So sundry members is the ordinary and preference. So draw there, ordinary, sundry. Ordinary, sundry. Ordinary, sundry members. Account. Ordinary, sundry members account. Ordinary, sundry members account. So ordinary sundry, we said that is the account where they are going to be settled fully, so that when they are going, they go with clean hearts. So check how much was the balance. The ordinary share capital, that is their balance in that company, which they want to be compensated. So how much is the ordinary share capital? You come here and say balance goes down. Ordinary capital, 6,000. Is there share premium and or revaluation? Revaluation, eh? Any reserve belongs to ordinary shareholders. So there is revaluation reserve, unit reserve. How much? 400.8. Even share premium, if it was there, share premium also is part of their claims. Bring it there. Then there is what? Revenue reserve. Revenue reserve is retained earnings, but apparently it is negative. So it will reduce their claim. So retained earnings, actually you can call it accumulated losses. When your preference will be compensated, this one nobody will compensate. 38, 22.7. Is there any intangible asset which was not taken over? Goodwill and preliminary what? Expenses, those two. Preliminary expenses are the pre-corporation expenses. Those expenses we incur when we want to start up a company. They are normally capitalized as intangible. So goodwill, write them off. They are the people who are working telling people that they have goodwill. Now that they are closing, let them feel the pain. So preliminary expenses, 87.8. So the interpretation is the ordinary shareholders, this is what they wanted to be compensated. But we tell them, stop. You have some losses, your goodwill is worthless. Even those costs which you are incurred and your capitalized, you write off. Then they will get something. Zawadi, from Zawadi will give them something. So whatever they are given, we debit to reduce their claim. So, yes, so Zawadi compensated them in which notes? Check the additional information. Example anakuambia hata hana bio. Anakuambia how the ordinary shareholders were compensated. Note number 4. Check note 4. Note number 4. Check note 4. The ordinary shareholders in AFRA were issued with 2 new ordinary shares of shillings 10 each in Zawadi Limited for every 5. So Zawadi aliwahudumia wakawapea nini? Ordinary share capital. On what basis? They got 2 new for every 5. So you ask yourself, how many ordinary shares were they having? They got 2 new shares in that company. So they are going to be shareholders on the basis of 2 for every 5. So how many? 6,000 divided by 10. Shares. Yes, so 600 times, they were given at what price? Was it 10 shillings? Yes. So that is the value of those shares. $2,424. So whatever remains, either they have lost, they have gained, none of your problem. Whatever remains, you are going to close to the realization account. That is the final account. So can you balance that account? Balance off that account. Yes, please.
That's what
Mm.
I'm somewhat confused with that one, especially when we get to number 4.
Uh-huh.
The ordinary shares are limited, but we should be true. The ordinary shares of 10, which is 10 each, is the one limited. Oh, sorry, my list of
So for every 5, Damaris, what is the issue? How did we get the 600? Online? Alright, mtu ambie Damaris, where's 600 coming from? Ama ni miujiza? Ama ukipata swali ya reconstruction unaweka 600? Online, can someone tell Damaris where 600 is coming from? So it is balancing, or there is a difference? Difference on which side? Credit side, eh? So that balance, you say to realization account. Realization account. So that is our balancing figure. How much? 29.7. So Damaris, umeridhika na hiyo majibu? Sawa. So it has balance on which side? Credit. I close it to the debit side of realization. So back to realization. You come here and say ordinary sundry. Ordinary sundry. The word sundry kishaonekana na ordinary is enough. 29.7. All their books are close to realization. Let's go to preference. Let us go to preference. And please, let's make this thing practical. People are complaining. Tell us, how are things going to be? So we were preference shareholders. Unajua preference shareholders? Wale si wenye kampuni wanakujanga na gazeti Fridays, ndio? We intimidate accountant. How are you? You are doing well? Bora ujue yeye. So preference. So come up here and say preference sundry members. Preference sundry members. So we want to settle. We want to settle preference shareholders. We want to settle preference shareholders. So preference shareholders, I want us to reason together. What will we be complaining about? Umesikia, sisi tuliweka pesa yetu hapo, tumesikia wanafunga. Another company is being formed. What will we claim about? See our capital. Kuna capital to the letter 1, 2 dividends, which we have not been paid for 3 good years. You will tell them, kama ni hivyo, capital yetu mulete na tulipe the 3 years arrears. Then we'll be good. So you come here and say balance drops down. That is the capital. So go to equity, check the capital of the preference shareholders. How much were they claiming? 24,000. Their capital, wanasema 4. Then they'll say we are also claiming our what? Preference div. Actually, in what? in arrears. They are in arrears for how many years? 3 years. We computed it somewhere. It was 800 and how much? So preference shareholders, if you pay them 48.40, okay, they will be very comfortable. Very comfortable. Very. So what you do, check how they were compensated. With them, they will not suffer anything. How are they compensated? So in your compensation, you check the two. You check for the note where they were compensated the capital, and the note where they were compensated what? Arrears. Si lazima walipe in full. Biashara ikianguka, at least you get something. To the extreme hata unapoteza kila kitu. So Mungu akikusaidia umepata kitu usiongee sana. So from Zawadi, so which notes do you want us to capture? 1 and 2. Yes, there must be 2 of them, 1 for capital and 1 for the arrears. Let's start with note 1. Note 1, Zawadi issued 3 new ordinary shares of shillings 10 for every 5-7% cumulative preference shares in addition. Whatever in addition first, capture that one. So from Zawadi number 1, Zawadi has given them what? Ordinary share capital. On what basis? What for what? 3 new for every 5. 3 new for every 5. 5 what? Preference. So how many preference are we having? Check, then divide. Alice, check and divide with the power value. 400.
Yes.
Yes, that is true. 400. But they were giving them those shares at what price? 10. So who is doing this work? Liquidator. Liquidator. $2,400. See, they will bring a lot of problems. They were claiming how much of the capital? 4. At liquidator, amewapea to 24. No way. Do something. So do something to Rudy kwa notes. In addition, the 7% preference shareholders in AFRA were issued with 2 new 10% preference shares of shillings 10 per value in Zawadi for every 5-7% preference sour. So they were given, this one's for 7% in the books. So we pay another preference, but with what rate? 10%. So 10% preference share capital. What basis? They got 2 for every 5. 2 for every 5, but you are having 400. So, yes. At what price? Those preference at what price? 10 shillings 10. How much? 2 for 5, 400 times 10. 1600. So 16 plus 24 is 4,000. Hapo wanafurahia. Alafu unajua wanafurahia, alafu wanasema lakini si kuna arrears hatujalipwa for 3 years. Turudi. Let's go back. Hiyo 840, let's see if liquidator can do something. Number 2. The preference dividends in AFRA were 3 years in arrears. The 7% preference shareholders in AFRA will accept 3 fully paid ordinary shares of shillings 10 in Zawadi and hapo mkifika tutakuwa vizuri na reconstruction zote. Kuna kizungu anatumia hapo inachanganyana. And shillings 20 of 8% debentures in Zawadi for every shillings 100 of preference dividends in what? Area. They gave out how many items? 2. So you come here and say another one. In ordinary. So another ordinary share capital. On what basis? 3 in arrears? Oh, yes. So they gave them 3 ordinary. Soma vizuri. The preference dividend in AFRA were
3 years in arrears. Oh, you three nimesoma ni hiyo. I hope the 7% cumulative preference shareholder will accept 3 fully paid, yo 3 shares of shillings 10 in Zawadi, so 3 at a value of 10, and shillings 20 of 8% debentures in Zawadi for every shillings 100 of preference dividends in what? Arrears. Unaona hiyo for every shillings 100. That 100 is standing for the 2. Ukienda kwa debentures, pia uta based on the 100. Ordinary also you based on what? The 100. So they were getting 3 ordinary for every shilling. How much? 100 in what? Arrears. How much was in arrears? Shillings 840. And each ordinary was being credited at what price? 10. So soma hiyo kitu yote. Hiyo 100 ndio inaletanga issue, but ukishika ni hivyo. The 100 relates to the 2 of them, both the debentures and the ordinary. They will accept 3 fully paid ordinary shares of shillings 10 in Zawadi and shillings 20 of the 8% debentures in Zawadi for every 100. So the 100 is for the ordinary. The basis will apply to ordinary and debentures. How much is this?
So the is irrelevant.
It's not relevant. 20 near debentures. So how much is this? 252. So hapo wana negotiate wawachie ama mnaona aje? Should we forgive them? Out of 840, you know, 840,000. We compare 252. And let's do something. So again, they said they want what? Debentures. Wakapewa 8% debentures. So Madenge check here. What basis? They were getting, check here. They were getting 1 debenture for every shillings 100, and we had 840 in arrears, but each debenture was credited at shillings how much? 20. Tusome hiyo kizungu. Iko wapi hiyo kizungu? In Zawadi, and shillings 20 of 8% debenture. So shillings 20 of 8% means 1 debenture with a par value of 20. But a student will still be okay akichukua 20 over 100 times 840, but now times 1. But the correct interpretation is you get 1 debenture for every 100, but that 1 debenture has a value of how much? 20. Ukishika nipo. Ataiko kwa pewa yako. Ama hujasoma mpaka huko chini. Hiyo wana iko huwezi iona. Ni kizungu venye imekuwa designed, Unajua umesema and shillings 20 of 8% debenture. It means 1 debenture with a value of 20. Very good. So how much is that? 168. Actually, it's giving there. Wametoboa kulipo yote because that is the end. So whatever remains close to realization. It's good. Close that one to realization. Close that one to realization. How much it will be balancing on the debit? Yes. So debit means they have lost, but we will see in the loss activity. The loss activity, where angalia to the balance, close it to realization. So realization, balancing figure, how much? For 20. Funga huko kwa realization. There is no way we are taking it. They have lost actually. So that loss is on the debit. Go on the credit. Go on the credit realization account. So credit realization with 7% preference sundry. Once you mention preference sundry, that is enough. That is 420. There is one account I always want us to prepare. Na kwanza imefichwa hapo. Debentures. Sometimes napata haina maneno mingi, but it's very important to prepare that debentures account. So I want us to check because the debentures are also providers of capital. Eh? So what do wakifunga na wao walitupatia pesa actually? We need to see how they were compensated. If they lose, fine, we'll close there. So come up, check the balance sheet. What was the percentage of the debenture holders? It was 10%. Eh? So right there, 10% debentures. 10% debentures. But the external isipokuja kwa mtihani ni exam atakuwa umetwist ndio watu confuse. Otherwise it should. Dominic unasema ati inakuja May 2023. 10% debentures. Na ukikutana naye. Hadi wewe question 5. Wale wamefunga chini wanakuambia don't touch the paper. The inaona external. Unaona the necessary books na ulisema hiyo ni swali ya 2023. Unaona the necessary books to close. So balance brought down. These people, they're given us a loan of how much? 4,000. Eh? So they gave us a loan of 4. Surely, we cannot close and these people gave us a loan. We must see how to compensate. Otherwise, it will take us to court. So note number? Check note 3. Check note 3. The existing 10% debenture holders in AFRA were issued with 5 fully paid ordinary shares of shillings 10 each in Zawadi, and so he paid and shillings 40 of 8% debentures for every shillings 100 of the debentures. So from Zawadi, they have given us 2 items. The first one is which one? Ordinary share capital. On what basis? They were issued with 5, right? They got 5 for every 5 fully paid ordinary shares. For every 100, no? Yes, for every 100. So, and the loan was how much? The loan was 4. Yes, they were getting 5 ordinary shares for every shillings 100 of the loan. And the loan was 4,000. But the ordinary was credited at what price? 10. How much is that? 2,000. Give us there 2,000. Then wa complain wakasema bana kweli wapea loan ya 4 million tupe 2 million hivyo tu. So wameongeza the word and what? And shillings 40. So that shillings 40 is the par value. So it is 1 debenture with a par value of 40. So they got 8% again, 8% debentures, 1 debenture with a par value of 1 debenture for every 100. And we were having 4. And the par value, shillings what? 40. Yes. So get 1 for this, that. 1,600. Hiyo balance yao, we don't have any biashara now with them. Wale wale watageni watu wakiumia. Realization balancing figure, how much? 400. Please, those are the ledgers which the examiner required. So close it to realization account. On which side? On the credit. Yeah, close it on the credit of realization. So this is 10% debentures. 10% debentures, 400. Very good. All right, so back. We are going back to realization. Now we want to close realization. But realization you cannot close before you close the purchaser's account. So we have to close the purchaser. We get the purchase consideration. We have it there. Kwisha. So Zawadi, I hope you connect well. Zawadi Limited, to get that purchase consideration is something which you can do even for 1 hour. So the easiest way to do it is this way. Zawadi is our customer. Si wao wanunua biashara yetu. tunawatumia invoice. So when we invoice them with the purchase consideration. When they pay, we credit what? The account. Si customer ukimpa invoice akilipa una credit account. So credit the account with what they gave us. These people have been giving us what? Ordinary share capital. So what I want you to do for me, go to ordinary, I've deleted those. Go to ordinary share capital account, preference and debentures. Sum up for me all the ordinaries which we have received from Zawadi. Is it medical from Zawadi? So ukiona ordinary, sum them up. Something else they have given, which I noticed, they gave out 10% what? Preference. They also gave out 8% debentures. They also gave out what? Cash. So can you look for those things? Umepata? Yeah. Have you added and gotten uniform answers? Ordinary imekuja ngapi zote? What we received from 7052. Yeah? Dominic is saying 710. Anybody not getting that answer? I can see an online getting the same. Good. Preference when you sum all from. You got? It was what? 1600. 8% debentures when you sum. 1768. Cash was 30. So the question is, why are these people giving you all these things? Wanakupea kwa nini? So to compensate the invoice value, and that invoice value is the purchase consideration. So to get that, sum up all the items you received. See on your net payment. 10 for 50. Let up. 10 for 50. And that account ends there. So that is what they have realized. Bring it here. So Zawadi Limited, purchase consideration. They have given us 10 for 50. 10 for 50. Full stop. And to confirm whether we are accurate, this account should balance. If you balance, kuna shida. Can you balance? No, in a balance now? 14? 22.9. We are very accurate. Please, kama kuna kitu umeandika lakini hujaona, sema before to book a new company. We have closed the old company successfully. Is there any question? Basi mmeshapita. Siwalete mtihani. After hiyo paper ya mwisho mtafanya nini? The last paper.
You are the same to find us.
When? Nyumbani kwa nyumba?
Yes.
Unaenda? Celebrating.
Yes.
Anauza alafu uitwe fellowship tena. So hiyo tumefunga, no question. Let's go to Roman 2. Journal entries. Journal entries to record the relevant transactions in the books of Zawadi. So tumeenda Zawadi tumalizana na Sarah. So write their journal entries to record now those items. Journal entries. I want to delete this one. Because up. Okay. Oh, God. So write their journal entries. So journal entries. So journal entries. Ukisikia unaulizwa journals, you are simply being asked which account should be debited and which one should be credited. Nataka tuchape hivyo ndio. Latest by 11:45 we should be done with this question. We start the other one by 1 to Maliza. So those journals, sometimes they are very difficult to prepare, especially if you don't know where to start from. So to prepare these journals, I want you to master the Unity 8 marks. You only 8 marks. Senior advanced AFRA. Anaweza hizi ledger zote mmechora ni 8 marks peke yake. Learning kama ikishaenda juu utagundua hata ni rahisi si ngumu. Then kwa mtihani hakuna mtu unafunza, utaandika at your own pace. Ndio. So next, the journals. One, there is no structured way of doing the journals, but you can master this flow. Record the assets first. The assets they took over. Unajua tuko kwa zawadi. So bring the assets they acquired and the taken over value. Now not net book value. Net book value we have closed. So go for the taken over values. Taken of the assets. Not number 6. Debit all those assets here, all of them. So you come and debit PP. So journal 1, PP is how much? 94.86.8. Available for sale 810. Inventories ni ngapi? 608.7. Receivables 477.1. Financial assets 216.4. Those are the assets they took over. So you debit the assets in the accounts, in the journals. Then you credit the total, you credit what we call the maintain an account known as business what? Purchase, correct. Business purchase account. So sum up. That is how we start the journals. Sum up. So John is getting 11,599. 11,599. You can give a narration. You say to record the assets acquired, assets taken over, to record the assets, whichever you want. The assets taken over, the assets acquired. Stop. At least to mesema kitu. Yeah. I was not even to start with the assets, but fine. No problem. Number two, you cannot record assets without recording what? Without recording the liabilities. So they are sisters. So as you have recorded the assets, also record liabilities they took over. Liabilities, read note number 5. The current liabilities of Asara were taken over by Zawadi at book what? Value. So liabilities you credit. Credit all the liabilities, debit business purchase account. It's just the opposite of assets. So say business purchase account. Leave it hanging. Go to current liabilities, then you pick the book values. So book values, accounts payable. Payable ni ngapi? No, imeanzia overdraft. Yeah, imeanzia la bank overdraft. So bank OD, they took over at what price? 775.8. Payables 1962. Tax 275.1. There were those three. Get the total, wake up alafu useme to record the liabilities acquired. How much? 30? What? 12. To record the liabilities taken over. Alright. Number three, when now we have considered all the liabilities and assets and liabilities we are taking over, we sat and agreed with who? We sat and agreed with who? AFRA. So that's the zawadi. How much do you want us to pay? So there was purchase what? Consideration. You have to record it here. So the purchase consideration, you bring it here. You debit the business purchase account. It was how much? Business purchase account. Yes. We'll have to debit how much? 10 for 50. 10 for 50. Yes. Debit the business purchase account with the purchase consideration 10 for 50. Then recognize AFRA in our books as AFRA Limited as creditors. Okay, pocket invoice for supplier. What do? So you credit the supplier's account. So 10 for 50. Back up 10 for 50. That is the amount they want us to pay, and we will pay. We have money. Shares. Yes. So to recognize the purchase consideration. To recognize purchase consideration. As simple as that. Then number 4. Actually, I normally start with this. I don't know, but it's still okay. Number 4, show me how this amount was settled. So when you settle, eliminate liability. So debit AFRA. So debit AFRA Limited with the 10,450. How was it settled? Check Zawadi account. Ordinary share capital, 70, 52, followed by 10%. Preference, was 1,600. Then again, they gave out what? 8% what? Debentures worth 1768. Then they gave out what? Worth 30. That is how they settled. That is how the amount was settled. That is how the amount was settled. So, fine. You can say anything there. You say on settlement of purchase consideration. On settlement. So when you pay them, debit the liability account, then credit how you paid them. Last, I'm taking you back to group accounts. In group accounting, on acquisition, what do we normally check? Kwa group tukianza tu, tukimaliza tu before tuende kwa balance sheet. Nini natushikanga kwa non-current assets before tusonge? Kwa non-current assets. Nini nakuanga block hapo, stop off hapo kwa non-current assets? Sini goodwill. Yes, goodwill inakuanga issue hapo. So even here, this is acquisition. You must assess whether there was what? Goodwill. So let's check whether there was goodwill on acquisition. Actually, the last thing in the journals, journals question. So goodwill, how do you get goodwill? The formula mnajua kama kitu kingine. What is the formula? It's the purchase consideration. So I'm not sure whether we are going to have positive goodwill. So let me assess it outside here. We can have negative. So goodwill, you have told me to take purchase consideration. Purchase consideration is how much? 10 or 50. Then we normally less what? Net assets acquired. So here we don't take the equity component. Take the total assets. The total assets we acquired is how much? 11,599 minus the liabilities we have acquired in total is 12.9. So take this minus this. Those are the net assets. Then you subtract. Joyce, wewe unasema retained earnings. Retained earnings tunashikaka kwa non-current assets. Retained earnings inatukomishanga huko kwa equity. Kama siku hizi nakuja hapo juu. That is the net assets. After subtracting 18. That is the goodwill. It's positive. Eh? So goodwill, you are saying 18? What? 9. So we have goodwill. There's goodwill. So goodwill, you come and debit. You say goodwill. Goodwill. 1863.9. Then you credit business purchase account. 1863.9. To record goodwill on acquisition. To record goodwill on acquisition. So you take the total assets acquired, not the book values. I've seen some people taking book values before. Ukitumia book value bado uko kwa hasara. Sasa tuko kwa zawadi. So you take the acquired values, which we have in note 1, then the what? The liabilities, you subtract. So total assets minus liabilities, those are net assets. Purchase consideration we have. Question. If it was negative, which is possible you can get, if it was negative, you just reverse the entry, debit business purchase, then you credit capital reserve. Then capital reserve will go to equity as part of equity down there. So, tumaliza, tunaenda kwa balance sheet. Unless someone has a question. Unless someone has a question on the journals. If you don't have a question, then let's go to statement of financial position. So right there, goodwill narration analysis to record goodwill arising on acquisition.
So what if I would exhaust everything of the journal entries?
Exhausting.
If I not post everything.
For example, Max Negapi.
I've reached number 3 and
Now you're tired.
I will still stop all the facts there. That's what my English is.
Hakuna sheria hapa. Hapa.
In the worst scenario, that is what they
You know, sometimes kumaki hiyo kitu inakuwa ngumu. Inaweza kuwa ngumu to some extent imakiwe hivi. How many marks? 6. Inaweza kuwa ngumu ikuwe mark this way. 1 2 3 4 5 6 7 8 9 10 11 12 13. Any 12 at a half. Umeona nimeweka tick. So wewe ukifika kwa umefanya the first 3 wote zingine zitahesabiwa alafu upewe zenye umepata. Ni gani zinakufurahisha? Assets and liabilities.
even number 1 or 4. Hapo itafika.
Kwani goodwill ni nyepesi. Sasa mtu wewe unatuenjoy. Unasema utafika number 1 mpaka 4 alafu 4 kule ngumu. Uachie nani? Hiyo scenario hakuna. Let's do balance sheet. Let's do the balance sheet. So right there, Zawadi. Zawadi Limited, opening statement of financial position. They are new. Mungu alipofundisha hapo unaweza sema sasa ati simsana ni kuchukua purchase consideration utoe net assets. Lakini kitu kimewachwa na mtu alliance. Sio ni kitu serious. Well, shillings and thousands. Teremsha hiyo balance sheet bill. Sasa hii ni UN, hii hata ina maneno mengi. Na current assets, you see the taken over values. Those are what you record, not thinking. Hata tukikuwa na computer, tukikuwa nafanya na computer. Kama SCA, you just copy paste. Unazichukua hapa. So bring them here. Non-current assets BP 9486.8. Na hivi tunakuwa ngumu hapo. Mtu anaenda kwa mchezo. Ilikuwa gani? Ni book value ama ni take over? Unaanza kufunga macho unaangalia hiyo Sunday. Ilikuwa Sunday gani? Nani alikuwa mbele yako? Baadaye aliuliza nini? Ni taken over ile tulifunga. Then available for sale, those are also long term 810. Inventory wachana nayo isiwa that one kisha goodwill. Bring goodwill here. Goodwill we got 1863.9. Nothing else. Can you add? Imagine reconstruction upate 16 over 20. Cash flow upate 17. Sio ni 33. Na ujaguza group. Yes, unakaribia hapo. Wewe kama examiner, how much is this? Value? What? 7. Run. So hiyo class yenu mtakangi kupiga story. Unasikia mnyuku story inashika. Unagaa serious na maisha. Current assets. They take over values. Ina maneno mengi. Inventories. Check note journal 1. Inventories we have 608.7. Receivables 477.1. Financial assets, 216.4. Can you add? We bought a total, total assets. Current assets, when you add, wale kuna time inakuleta juu lakini inakuleta juu hadi. How much is current assets? 1.3? 1302.2. Total assets will be? Use equal 11 because 1346.
13,462.9.
Like this.
Yes.
Correct. Equity and liabilities. Equity and liabilities. When we were doing advanced FR, nikifanya mtihani reconstruction, the external actually. Mimi nilianza na balance sheet. This is the one I started with. Si bora umesema tu Roman C. Because this one is, you know, it is easy. Kwani tangu tuanze si ni goodwill peke yake na unalenga hiyo kwanza. Equity and liabilities. Check journal 4. Check journal 4. Check journal 4. Unaona hizo maordinary, unaweza nifanya style nyingine hata wewe uelewe kwenye umefika hapo na umepata. Tunasoma tu hizo notes, they have given this for this. Unaandika kwa hiyo karatasi ya blue. Inakuwa blue ama green hiyo ya custom. Ala kama ni papo. Ukisoma number 1 3/5 for this. Weka hiyo, weka unaziada. Bora wale kwa hiyo jana. Haya, ordinary share capital, check your journal 4. 70 52. Those are the shares they have given out. Then 10% preference. 16. That imeisha hapo. Hakuna kitu kingine. The debentures will be non-current liabilities. So add those two. That is 86.52. Non-current liabilities. 8% what? Debentures. You check that on 4. They have given out 1768. Current liabilities. Check your journal number 2. Current liabilities, there is an issue with overdraft. Inakuwa na issue kila siku. Bank overdraft, they took over how much? 7. Are you there? The bank overdraft. Yeah, they took over 775.8. However, check journal 4. Well, took overdraft, but if you check journal 4, are you seeing the negative cash balance? Ile cash walipeana. Sindio? Kwani walitoa wapi? Si kwa bank. So there is that negative cash in journal 4. Add it. It is part of the negative balance there. So remember to add that here. Because when you reconcile cash book, so your cash itakuwa kwa the credit side as negative cash. So let's just put it as part of the overdraft. How much is that? 805 point. Go back to those other ones. Payables, journal 2, 1962. Tax, 275.1. Total equity and liabilities. It is balancing. Iko sawa? Sawa means 13 462.9. You want how many minutes break? It is 11:51. Can we converge immediately at 12? Sawa. So you can stretch like prayer. Sawa. Then when you walikuja late, mnaweza piga simu mseme tulifika salama. Nilifika salama. Useme tu. 20 minutes itakukalisha. Let's take 10. Wenye waendi break, waanze kuangalia hiyo swali lingine. Na pia wenye wanaenda break, wenye wanaenda tea break, kuna tea break. Sawa.
Nimemwambia akikuja atakuja atawatans. Kicheka unacheka. Tukilia unalia.
We are back. Ni November. Kama nilisema? Si November. Nilisema November. Nilisema November 2018 question 2. Sasa itabidi tumechange to November. So November 2018, May is internal, eh? Once we kill that question, we go home. All right, let's go to November 2018, question number 2. Which question? Are you there?
Yes.
Let's read. It says, B limited and H limited. But then ukitupa tu macho bila kusoma hiyo swali, sinaweza kufikia ni group. Useme group sianzi na wewe. Ukiangalia nyingine unaona tena inakaa group. Unaanza kusema group leo imekuja mbili. So B and H limited are private liability limited companies operating in the service sector. They have been reporting successive trading losses for several years, principally due to severe competition, which has put down pressure on their revenues. The directors of the two entities, who are also the main shareholders, have unanimously agreed to wind up the company's respective businesses and amalgamate them into a new company to be named S Limited with effect from 1st October 2018. Fine. So wanaua hii, then they bring it together. The statement of financial position of each company is as you guys can see. Additional information number 1. The authorized share capital of the new company was 120 million, comprising 12 million ordinary shares of 10 per value. So ndio wataanza kugawagawa. The new company S was formed with the 12. So they will start giving people to compensate. Number 2, preference dividends in B were 3 years in what? Arrears. While in H, preference dividends had not been paid for 2 years, including the current year. Only 20% of the arrears of preference dividends were settled by issue of ordinary what? Shares. S Limited issued 3.4 million ordinary shares of shillings 10 each, credited at shillings 5, in favor of the preference shareholders in both companies. The ordinary shares were allotted on the basis of the preference shares held in the old companies. The preference shareholders committed to immediately pay the balance on the shares issued. They were given at how much? 5, but the par value was 10. So hiyo balance ingine wanalipa baadaye. Whatever they will pay later, itakuwa later kwa journals. Wakifika huko, wanalipa cash of the balance. That should not be your main concern right now. The bondholders in both companies were settled immediately by the new company issuing ordinary shares of 10 each to satisfy the nominal value of the bonds. The new company also issued 4.6 million ordinary shares of 10, credited at 2.5 each in favor of the ordinary shareholders in the old companies. The ordinary shares were allotted on the basis of the ordinary shares held in the old companies. The ordinary shareholders were to pay the balance on their shares immediately. The current liabilities of the old companies were transferred to the new company at their book values. The copyright in B expired upon amalgamation of the old companies and was therefore done what? Written off. Next. So copyright written off. The tangible assets were taken over by S. So B and H, they acquired PPE and current assets, as we can see. Liquidation expenses of B and H amounted to 8 and 5 million respectively, were paid by S and treated as preliminary fine. Assume that all the above transactions were completed by the close of the business. Required the following ledger accounts in columnar form to close off the books of B and H. We cannot prepare those things in columnar unless ledger accounts. You have to use the T account for the ledgers, maybe where necessary. So they want us to prepare a realization account, preference shareholders, sundry members account, ordinary shareholders, sundry members account, journal entries in the books of S to record the transfer of the assets and liabilities, ignore narration. So sionge repetition. Then opening statement of S. Let's start with the realization straight. Hapa kuna kuchora the date of acquisition. Group here kuna maneno. So realization account. Realization account. So realization account, that only take us a whole day. What we do, so nataka realization for each. Let's do this. We combine them in one account, all of them. So we can have here which one? It is H and B, B and H. B and H. So B and H. Shillings are in thousands.
So have your thousands. Yeah.
I was telling early morning, you got a friend of mine. So the friend of mine was also having a friend of his. So the friend of his was giving us a story and anafanya CPA. So anasema ako Sec 5. Niambia where he is. Wanamalizia reconstruction. They are starting group next week on Tuesday. Group next week. Wanamalizia reconstruction. They will start group next week. Nikasema kumbe tuko sawa. So ilibidi nimwambie hata sisi tunaanza next week. Sindio? Ndio usishtue mtu, naambia hata sisi tumelemewa. Si after exam ukisikia mtu anasema kimekuwa mbaya. Kama imekuwa mzuri kwako, unamwambia ilikuwa mbaya, ilikuwa mzuri. Mwambie hata mimi sioni. So let's kick off. Let's kick off. Bring the assets at book value, at book value, at book value. Close them in the realization. PPE 16.5. The other one is 12. Copyright was written off. That one will be written off to ordinary sundry. Ignore. Current assets. You don't even break the current assets. Life has been made easier here. 52,530. Let's bring the obvious. Preference dividends in arrears. Huh? The year 24 is the addition. Preference dividend what? In arrears. Letter. Can you check those arrears? It was mentioned in which notes? Note 2. Preference dividends in B were 3 years in arrears, while in H 2 years. So can you do for me that? Go to equity, take the percentage. Preference, the percentage was 7.5. So take 7.5% for B, you multiply for how many years? 3. So for B you will say 7.5% times what? Times 10. 10 times how many years? 3 years. That one will be 67.
Yeah.
7.5 times 10 times 3 years. Right? What? 3250. Then H times this one is 24. How many years? 2 years. This was 2 years. So H will be 3,600. So this is 3,600. Cash book, ile pesa wanakulipianga wewe leta hapa. So cash book, liquidation expenses. Which note? The last note. The last note, assuming number 9, B 8 million. H 5 million. Yes, please. Yeah. Dividends is in shillings. No. Yes. Dividends are in shillings. Ama unaweza toa dividends kama mbao. They must be in shillings. Let's credit it with liabilities. Liabilities, they took over the current liabilities at book values. So credit the liabilities here. So where are they? Liabilities, where are you? Payables, how much? 37,200, 18,400. Overdraft, 200, 15. Sure. Yes. So we have to leave it hanging. We will check the providers of capital, ordinary, preference, bondholders. We close here, then purchase consideration. Kuna shida? It's 2,000, eh? Yes. So leave it hanging. Just leave it hanging there. We proceed. Let's go to Zawad. See Zawad. Which the acquirer? S. So right there, S limited account. S limited account, even if it is not asked, actually jaulizwa, but that account is the one which will help you to get the purchase consideration, which will help you to close this. So there is no way you can ignore it at all. You can't. Ndio watu wamesahau internal kabisa. Internal hata iko kwa akili ya mtu. Ndio? Sasa watu wanagonga tu sundry members. Watu wakumbuki mambo ya capital reduction account. So B, H, B, H. Only most accountants are working for politics. What's the issue? Wako, but they're not many. There are very few. Oh, I know. Ama they are not risk takers. You know, politics is not about risk. They are not many. Accountants are what they have earned that is going to give out. And they're very stingy. Very. What has entered? No crediting anymore. So this one you leave it hanging, but leave it with purchase consideration. But they say accountants are not good managers. They don't want a lot of stories. Let's go to the next. So in the question, this one was required Roman 1. Let's go to Roman 2. Preference, shareholders, sundry members. Let's prepare that one. So Roman 2. Roman 2. Preference. So for each, this one is fine. So for each BH, this question. So shillings. So we start. We agreed that these people, they claim how many items? 2. They claim their capital and they claim the dividends in what? Arrears. So show us on the credit side. Now ukituonesha ni ticks unapata kwa mtihani si bure. So say balance brought down. Balance brought down. Then you say preference div in what? In arrears. So just check them. It's easy. Let us see. How is the learning curve? It's better. Okay. How many people here are specializing in management accounting? KEMSA wanataka watu wafanya management accounting. Kwenda kufanya cost accounting ya madawa. Nani specialize kwa MA? Hiyo KEMSA ikae. You know, MA is very difficult than this one. MA is bad. Unapewa swali, swali. Unasoma, ukifika katikati umepotea, lakini ukifika kwa swali, advanced management. I agree. It's not easy. I know you want to set the cover one. I want to set too because setting is there. Balance brought down. But do you know there's a proposal? Do you know there's a proposal that it should come back to compulsory? Yes. Management accounting, because you know MA is a branch of accounts, just like financial reporting. So they are saying MA is part of the core. The things we should be part of specialization are things like ICT, but MA should be compulsory. Probably Sec 5.
2029.
Are the new? That thing should come back in the interim. You know, you want to find interim review after 5 years. I don't think you advise customer mechanics. What's stakeholders? So balance is brought down. Can you capture? At least unasema AFRA ndio mfuko. 1024. Then preference dividends in arrears, we are calculated them. 2250, 2250 and 36. Then debit, how they were compensated, you come and say from where? From S, correct. From S. So S will tell you, examiner will tell you how S compensated. So just check for me the note where S is trying to compensate preference. They have to tell you. Note 2. So note 2, preference dividends in B were 3 years in arrears, while in H was 2. That one, you know. Only 20% of the arrears of dividends were settled by issue of ordinary shares. They settled by issue of ordinary share capital. You need arrears, Atujaguza capital, so I have to compensate arrears. So arrears, 20% of this, 20% of that. See what you're saying? Yes, so they were given ordinary share capital to the tune of 20%, 20% of the arrears. So can you do for me 20% in each case? So 20% times arrears. 20% times the arrears. So 20% of 2250. You get? 450. The other one? 720. Hiyo ingine usitusumbue. Kwa nini mko mnalipwa? When we had money, why were you not talking? Now that we are suffering, we are even amalgamating is when you want to bring problem. Get what you have received. Then let's check how the capital was compensated. Let's check how capital was compensated. Note number 3. S issued 3.4 million ordinary shares of shillings 10 each, credited at shillings 5 in favor of preference shareholders in both companies. Both. So the 3.4 watagawana. So how will they gawana the 3.4? The ordinary shareholders were to be allotted on the basis of the preference what? Shares held in the old companies. So can you check for me the number of preference? You divide by, what was the power value? 10. So divide by 10, divide by 10. So that is 1,000. The other one is 2,400. So ordinary, they will be compensated this way. For example, B will take 1,000 over 34 times 3.4 is 34 times shillings 5. It is making sense to you. So they are saying on the basis of preference. So preference imekuwa 1 na hiyo ingine ni 24. So total 34. So on the basis it means huyo atachukua 1,000 over 34 times the number of shares they have been given. They have been given how many shares? So 3.4, but we're working in thousands. So that is at 400. Times what value? They had a power value of 10. Lakini wao walipewa at what value? 5. Sindio? They were given at 5. Hiyo ingine watalipa baadaye. So can you create for me that after you have understood? 5,000. So this is 5. What about H? H will be 24 over 34 by 34 by 5. On the basis of what you have. So you check the total preference you are having. So kila mtu achukue as a fraction. Copy? Yeah? Good. That is how you are compensated. There was nothing else. Can you balance? The balancing figure, urushe kwa realization. Please just copy when you have understood what has happened. Hiyo balance imebaki ya 5, hiyo tutasort ukiingia huko kwa hiyo kampuni. Wanaleta pesa. Tunapata 12 to 50 minus 450 minus 5. John, why did you just multiply by number of shares by 5? The examiner said, the examiner wamesema aje? They were credited at 5. You know what happens? Wamepea shares. Shares ziko na value ya 10. Lakini wanasema hapana. You know when they're compensating hizo mlipi ni bure. So for free unapewa at 5. Lakini mkienda huko kwa hiyo kampuni you top up in cash. So John, I hope you are hearing. You top up the balance of 5. So that one we will do later tukifanya journals. So for now, take the number of shares, you multiply by the value at which they were given. They were given shares at a value of 10, yes, but they were given credited at shillings 5. So what do you get? The first one is 68. 68 what? 100. 6800, and the other one? 14? 880. Okay. Funga huko kwa realization. To realization. So close that to the realization account. Close it to realization account. On which side? So preference sundry, that is 68, that is 14, it's 80. Very good. Let's do the next. The next is ordinary sundry members. So go for the ordinary sundry members. Ordinary sundry. Members. Ordinary sundry members accounts. Usichukie reconstruction. The construction is very nice. Yeah. Unajua kuna watu wengine wanachukia kitu hata kama kuna kitu kimefanya. Ile ni you know there's someone who can just say you without you doing anything. Yana mshukia. Na ukimuuliza hana sababu. Like I used to have a friend of mine in class. Nilikuwa niambia mwalimu namchukia. Namuuliza reason, namchukia kwa nini? Ukisikia reason nilipewa, na utashangaa. Aliniambia when they were having a conversation, apparently the girlfriend was in the class. When they were having a conversation with the girlfriend before that semester, girlfriend alimwambia, I'm always attracted to men who are brown, and the guy was dark. So when this lecturer came in, he was brown. So he had to get mwalimu from the word go. Imagine, the mwalimu hajafanya anything. So usichukie reconstruction, it is very easy. Unachukia tu mwalimu because story unasikia mahali. So you bring the balance brought down plus all the reserves. Share premium, return that, but return earnings kila siku unapata ikiwa negative, which hiyo side nyingine. So balance brought down. Balance brought down. Ordinary. 30 and 16. 30 and 16. And the equity still. Is there share premium? Yes. Yes, today it is here. Share premium. European claim yao. 16 and 14. Retained earnings, negative losses. Bring this side. So those are accumulated losses which will not be compensated. How much? 23, 400, 34, 300. Were there intangible assets? Yes. You remember the copyright? That copyright, write it off here. Copyright is going nowhere. Copyright. 84, nothing. So from S, from S. So which notes were they compensated? Kindly. Note number 5. Note 5. The new company also issued 4.6 million ordinary shares of shillings 10 credited at 2.5 in favor of the ordinary shareholders in the fine. The ordinary shareholders were allotted on the basis of the ordinary shares held. So John, you'll get that concept again. So from S again gave ordinary what? Share capital. Because of my space, let me do it outside there. So ordinary share capital for B, they gave us how much in total? How many in total? 46 times B. You check the number of ordinary B as a fraction of the total ordinary for the two. So B, where is the ordinary? 3,000. 30 divided by the power value. So 3,000, and the total is 3,000 plus 1,600, which is 4,600. times, they were given credited at what price? 2.5. You multiply by 2.5. The balance of 7.5 watasort baadaye wakiingia huko. Ile siku wataingia kwa hiyo mlango ya new company. Let us check. Do we normally have accountants members club? Ama tufungue. So tunaweza anza kitu kama hiyo. Kuna accountants members club? I've not seen any. Kuna wanakuja. Hiyo ukiko watu wahesabu pamoja ati subscription. Wanaleta shida. We will not even pay. They would pay. Because how much is the subscription for Mudaiga? 75. 75, eh? So this is 75. Balance will go to H. H will get 46 times 16 divided by the total times 2.5. They get 4,000. Kusha, balance that account. When you balance, is balancing on which side? At each. Oh, kivyake. Oh, which is okay. Kuna kitu kama hiyo. Thou shall not mislead the congregation. 30 plus 16 is 31. 31 minus 23 is around 7 or 8. 8 minus. Here the more credit. So no. B is credit straight. 16 plus 1, 17. 17 minus 34, credit. Zote credit. So to realization, how much? 700. And this one? 20. Take them to the debit of realization account. Take them to the debit of realization account. So tunaziweka which side? Huku, si ndio? So bring them on the debit. On the debit, it will be ordinary. Ordinary sundry. How much? 77. The other one? 20. 900. There is one which has not been asked, but we have to do. The one for bonds. The one for bonds. The one for bonds. So you will keep this one safe. So write for me bonds. Bonds what percentage? 10%. Eh? So right there 10% bonds. Let me delete this one. 10% bonds. 10% bonds. 10% bonds. 10% bonds. So 10% bonds. Ukitoka kwa hii ndio tutamaliza. Usichoke. 10% bonds. You know, in future you'll be wondering. You will be seeing watu watakuwa wanakuja kusoma CPA once a week. Unauliza kwa nini CPA gani mnasoma? Nowadays. Kate, kutoka atakuwa anakuambia mami siku hizi digital. CBC. Hiyo CBC ita apply aje kwa CPA? Yo. Ina operate aje hiyo kitu kwanza? But it's a good system. The only problem, which I think, I don't know, if you Kenyans are just corrupt in nature. Nasikia mwalimu ndio anasema talent, nimekuwa nikimobserve. Kama mweko sana mwalimu, watoto wa dynasty ndio watakuwa have observed pilots. Have observed engineer. Lakini watoto wa hustlers kama sisi, nilikuwa naangalia between tailoring and so you are being advised. Balance brought down. Balance brought down for bonds. 20 and 15, 20, 15. Alice Rose is saying introduction of practical is CBC already. Kwani kuna practicals mnafanya? Hiyo data whatever. So Alice anasema hiyo ndio CBC. They are all out what our level. From S, how are they compensated? Which note? They must be compensated. Note 4. The bondholders in both companies were settled immediately by the new company issuing ordinary shares of shillings 10 each to satisfy the nominal value of the bond. So they were given ordinary share capital equivalent to their value, 2015. So how are issue them? There is no problem. They were given ordinary shares to compensate the bond values. So there is no problem there at all. As now, there is no balance which we are taking to the realization. Can you help me now close off S to help us close realization? Close S to close realization. So S, I want to determine the purchase consideration, and the only shortcut of getting it, you sum up everything they have been giving out. These people have been giving out ordinaries. No. Actually, almost is there apart from ordinary and cash? Is there something they have given? A check from. They have just been giving ordinary. So ordinary share capital and cash. Those are the only items they have given. So please do me a favor, again, the way you did for me the last one, go to ordinary, preference, and bonds. So start with B. Ile tusema from, you check ordinaries, which be received on the debit, sum them up, bring here, also hedge, cash I think I have. The one which requires time is the ordinary. Can you do for me ordinary? So the three accounts, preference, ordinary, and bonds. So in those columns, B, then you go to hedge. Sum them up. Someone is confirming that ordinary for B is 32,950.
Yes.
Confirm? All right. So if confirmed, okay, 32,950. $31,720. The other side. Please confirm that you have these figures. 31,720. Then cash was not number. 8 and 5. So the totals and the purchase consideration. So can you add as you balance back? Anyone not getting those figures, you can raise an alarm. Then we come for the rest. So can you add so that we can get it? From here to end haraka. Hii ndio inakuwa time consuming. Damaris. Sasa. Damaris, unajua shida sina ya nani? Sina ya ordinary. That's the problem, but we can see. So Damaris for B, you know B ordinary, there is 450, there is 5, there is 20, now 75 for ordinary. If you check ordinary, there is 75. So you add this ordinary bonds and preference. This there are 1, 2, 3, 4. Then this for H the same 1, 2, 3, 4. Damaris, I hope you can be able to. Lenia's answered Ali. Ali, check what Lenia said. Confirm you are okay. Damaris, confirm if you have gotten it right. Okay. So when you balance, for S comes to how much? The purchase consideration for S will be? 950.
Yep.
And H? 36,720. Can you take these purchase considerations with the realization, then check whether they will balance? They should balance independently. Okay, it is balanced. Ina balance, kila moja na balance bibi yake. So purchase consideration, that is okay. 40, 950, 36, 720. Okay, if it's balancing independently, how much? The first one is 86. And the other one? So which one? Latest by 120 will be done. Latest. Journals and balance sheet cannot take us that long. Leave you in a waste time. So Ali, you are sorted. The other one was who? Damaris, you saw what you're asking. We want to move to, let's go to the journals. Journals, so right there, journal entries. That is B. Journal entries. Surely. Tukifanya hii na tena tufanye another one question tomorrow. Alafu tarehe moja walete reconstruction. Utasema hiyo kitu siwezi fanya. Hata ndio unaweza anza nayo. Maji na exam inaingia na unakunywa maji before ama during?
Nani hayo maji mwanzo?
Aliona?
Nani?
Let's 6-7 minutes. Hey. 6-7 minutes of silence to malize your journal. Then to relax and slow. So journal entries. Now we are in the books of S. So journal entries S. So S was the letter B and H. So wanachukua. So wale walikuwa hii na hii walete pamoja. So just bring them as a whole. So don't separate them. They will say they don't want narration. Yes. Who say? As we are starting, how do you want us to start? Assets, eh? So that one of the liabilities. What are the assets? The liabilities. Anza na Diki, aende kwa Faraja. Wacha tuanze na Faraja kwanza assets. So start with the assets. Taken over. Taken over asset note number 8. Kindly check note 8. Check note 8. The tangible assets were taken over by S, as our eyes can see. So, PP, debit them here. PP, you will take 12,500 plus 95 because tukinunua kampuni mbili. In our journals, can we record the asset? Now all of them are our assets. Yes. So you combine the two. We are picking them from note 8. The taken over values. How much? 22,000.
Next, current assets. 58 plus 38, 600. 90? 96, 600. But then, which day is ideal for you? We were having some conversations. I don't know how many yesterday, but one with Gilbert. I was having idea of welcoming some ISPAC, most of the chairman. Kata kaisi kuja if you can send it official. Wakuja waongee na hawa to advanced level. Nyinyi siku na tunamaliza. Musikwe in the dark. You know, like me, I was in the dark. After finishing in 2010, kwa dark. Mpaka huko 2015, 16. Unajua dark means what? You don't know what to do next. I think that's an issue, but then anasema subscription ya ISPA can be a problem. So can it be possible before exam? Ama we can do it after. After the only thing we are fearing, we can organize, then you fail to turn up. Come on, ideally it can only be on Saturday. Because weekdays is what was scattered. Think about it. It's Sunday. Credit business purchase account. Do you know the person you are addressing this way? They don't want narrations. So how much is the total? 118,600. Kindly bring the liabilities. Bring the liabilities. What did they say about liabilities? Note number 6. Check note 6. The current liabilities of the old companies were transferred to the new company at their book values. So, fanya reverse. So, debit the business purchase. Tafuta hizo current liabilities. Trade payables. Trade payables. Add them, please. 37,200 plus 18,400. How much is that? 55,600. Then bank overdraft, bank OD. OD is 2 plus 15, that is 35. That is 35. Wisha, can you add, fix it there? They don't want narrations, the better. How much? The which one? Kuna yenye nimeacha? You are overthinking. Itakuja. It will come. You will see it coming with your own eyes. You have too much information. How much is the total? 59,100. Number 3. Recognize the purchase consideration in your books. So debit business purchase. How much was the business purchase, the purchase consideration? What plus what? You need to report pale kwa S account. Kindly check. Total.
49.50 plus 36, 720. Can you combine the two? Combine the two. How much? 77? 670. Of which you recognize B limited in your books as a creditor, 49.50. Then this other one was for H, 36,720. To recognize the purchase consideration. Those are the purchase considerations. They are appearing, you got them in the S limited account. Next, number 4. Did we pay? Yes, we paid. We gave ordinary and what? Cash. So reverse the entries. This entry is reverse. So you will debit B limited with 49.50. You will credit H with 36,720. Then they were given ordinary share capital. Can you combine for me? Ordinary share capital, which went to B and H. How much? Mkonazo hapo tu kwa S account. Eh? What plus what? 32,950 plus 720. Thank you. That one comes to how much? 64. 64,670. Also cash. We gave them cash. What plus what? 8 plus 13. Which is this balancing? When you have that plus that, now you just reverse the entries. Goes up. Yes. Can you assess for me goodwill? Assess for me goodwill. Goodwill will be purchase consideration is how much? 77,670 minus net assets. Net assets is the total assets. Journal took. Total assets is 59,100 minus current liabilities. No. Sorry. Assets is 118. Eh? Yes, 118,600. Liabilities, the one which is 59. Oh yeah, sure. So deal with the bracket first so that we don't interfere with board maths. Bracket then subtract. So how much is the goodwill? Goodwill. Mm-hmm. 18,170. Then you credit business purchase account. 18,170. Inaishanga hapo, lakini kwa hii we will have one more. But mostly you end there. The reason why we are bringing one more, you remember those shares S was giving, like Pavali was 10, kuna mali walipeana credited at 5. Then another one 10 credited at 2.5. You remember? Yes. So then they said those balances will be done what? Be paid. So how watu wakienda wakifika hapo walipe. So debit the cash book. They will pay. So cash book, I remember the first one was 3.4. Those shares. You got 3.4. Yeah, the 3.4, they were compensated to the tune of 5. Then they will pay the balance of how much? 5. Plus, there was 4.6. 4.6, they were given at 2.5. They were to pay a balance of 7.5. Yes. The examiner said they will pay cash to make these shares fully paid up. So 34 by 5, which remain. This one they were given to tune of 2.5, so 46 Get everything. That is the last journal we are doing. Then you credit ordinary share capital. The amount you get, we shall go for ordinary share capital. Balance sheet is going to be here. So tulisema 107. Latest by 115. It should be done. Kwa hiyo ukisoma hivi, after passing hata even you will feel it. You will feel you did something. It was not easy road. But imagine, guess what? You will miss this Sunday class. Utakuwa unakaa hivi unasema hapa niende nikae na wao. Ulikuja utapata faces which you are not used to. So Joyce somewhere there. How much do you get for the cash book? 51,500. Credit shares 51,500. Thank you. We are done with the journals. Master your flow your journals. Assets, liabilities. Recognize the obligation. Show us how it was settled. Give us goodwill. Check any other information you deem necessary. Let's go to the balance sheet in the books of S. So, Joyce, I hope that is okay now. So, S Limited, keep any opening. Opening statement of financial position as at when? 1st October mwaka wa 2018. Let's start. Non-current assets. So we ufanye na journals to save on time. So non-current assets, do it with your journals. PP, journal 1, 22. Then there was goodwill. We got goodwill. Goodwill, we got how much? 18,170. Nothing else. Can you add? Na hii swali muangalie vizuri, wanaweza rudia. Haionekana kama hiyo. $40,170. $40,170. Current assets, inventories. Hiyo nimetoa wapi? So current assets, group imetuharibu kichwa. Unajua group unaweza sema vile zinaendanga. Inventory, receivable, inafuatwa na gani? Cash and cash equivalents. Alafu wanapenda kuweka financial assets. So current assets 96 what? 600. Kisha total assets. Total assets 1 what? 36. 136. Equity and liabilities. Labda kuna kitu tumekosea, but we can check very fast. That cash book inaweza kuwa excess, unajua kisho yangu iko tu itakuwa overdraft. Let's check cash book, Cash book, can you add cash book on the debits, then subtract the cash book on the credits? Which is which? Hapa kuna 51 positive, sio? Na there is negative 13. Now overdraft 35. We are remaining with cash available.
Yes.
Sure. So it will be available because positive is 51, negative is 13, another negative is 35. Tunabaki na cash book available. So please let's amend. Let's do that amendment. So cash, no one. Huh? That's how we have to play safe. Eh?
I have a question for you.
Yes.
In that cash book,
Yes.
you have seen, where is 7.5 per month?
Where's
4,600 and 7.5.
oh this one? Sio shares kuna mali walipeana na it means ukiuliza hii hata hii inafaa uulize. Hii ambayo. So walipeana share umeona? Umeona? Sasa hapo wacha nielezee tena vizuri tukimaliza. I show you. No problem. No, let's play safe, eh? Because sometimes they want the current assets as one figure or separated. Eh? So let's do this. Current assets tuweke hapa. Wanama venye umejisikia. 96. Then cash book tuongeze tu cash book tukwe pamoja. Cash book is 51,500. The last journal there is positive cash of 51,500. Then there is negative cash of how much? 13. Then there is an overdraft of 35. So what do you get for that? You get 35 flat, eh? 35,000. So can you add? Wakitaka 1 aggregate will be safe. It will be safe. How much is that? 131? 131,600. So we will be reporting how much? Total assets? 171. 770. So thank you. Equity and liabilities. Equity and liabilities. Equity and liabilities. Ordinary share capital. Ordinary share capital. Can you check the journal? It's appearing twice. Huh? Yes. Yes. Ordinary is in journal 4 and journal 6. So check ordinary journal 4 and 6. In journal 4, these people gave out ordinary one how much? 64. Plus journal 6 for cash, they have given 51,500. Can you add those two? One? 116. 170. Then what else? Hata kuna debentures. Hakuna watu kama kina debentures hapa. So current liabilities, payables. Payables check journal 2. How much is this? 55. 55,600. Actually, there's nothing. Can you add? Because sour means sour. 171, 770. Full stop. So you asking, kuna hii note najua huko peke yako. There is that note which is disturbing some people. This one here. You know, okay. These people are buying our company. Na wanatupea nini? Shares. You know, shares you are being given is to compensate you. So kuna zile the one for compensation is for free. Haulipi. Sindio? So wananunua instead of giving you cash, they're telling you come and be a director with a shareholder with this number of shares. So what they did, they are mean. Wanasema tunawapea, our shares are valued at hapo kwa CR12, our shares are valued at what price each? 10. Lakini nyinyi 5 to compensate. Lakini hiyo 5 nyingine mfanye nini? mlipe. So that's why the examiner was saying they were given 3-4 at 5. They agreed to pay the balance. So the balance of 5. Here in Guinea, they were given 4-6 at 2.5. They agreed to pay the balance. So balance is Melo. Have you understood that? So that is okay. Can we go to the next question? Right now. Now, go and check. We are doing tomorrow, May 2021. That will be our last question for reconstruction. May 2021, question 2. May 2021, question 2. Today there was an issue with the time. There's a group which was arriving at 8:30. Kuna wengine wamekuja 9, wengine wamekuja 9:30. Lakini kuna wengine wamekuja voluntarily. Kuna wengine wamekuja voluntarily at 10, So tomorrow we said what time? 9:30. The reason why I want it to be 9:30, early morning we'll be having FM from 7 to 9. So they cannot transit immediately. So 9:30 again to 1. So to 1 means we will finish this question, then I introduce EPS. Yes, so that's it. So thank you. We can now go for the holiday. Holiday. Wewe unataka kuomba. Nataka holiday. Sasa yeye anajifanya sasa sikii.